Hey traders, this is Scott Barkley. This is a quick video on do I need to monitor the Forex market all the time. Since I need to balance my work and life and try and fit Forex Target Trading into that, and I'm spending hours and hours and hours watching trades, all right? So I get asked this question a lot, and the answer is no, you don't. Most retail traders fail because they're spending their time trading and have not allocated the time to learn to trade. The time commitment is up front, not down the road when you're trading. Traders should approach trading the same way they would if they were making a career change. No matter what career you're looking at, there is an educational component, an internship under someone who knows the ropes, and then the OJT, on-the-job training. Doesn't matter if your choice is getting a commercial driver's license or you want to be a doctor. So once a trader has the skill set, the time trading might be less than an hour a day. Once you have the basics down, you need to trade only what you easily see. I have a trader who trades bat patterns in the Forex. I don't see them easily, so I don't trade them. But he should. Another trader is strong in cup and handles. Same story. I don't trade him, but he should. I have trained hundreds of traders who are now full-time professionals at banks, prop firms, and just trading on their own. They all follow the same structure. Knock down the basics of price action, which is what the bankers trade. They did the grilling work up front, and they found their style, and they trade what they easily see. You can ask any professional trader how they trade, and they can tell you in less than 40 seconds. Me, I'm a bear flag trader. I only trade currencies that are shorting, and primarily that's the EJ, CJ, AJ, NJ, or GJ. Traders who are spending myriad hours in the charts are those who have not done the above, so they have to watch their trades since they don't trust the market or their own trade position. The market is always right. It's all about being on the right side of the order flow each day. The clues are always in the charts, but unless a trader learns price action, they are usually on the wrong side of the order flow. Price action is the system that professional traders trade. They don't rely on indicators since they have been shown to only be right 50 to 55% of the time. Basically, it's a coin toss. I'm going to buy it if it comes up heads. I'm going to sell it if it comes up tails. So think about it. If the market is always right and you are wrong, you must change. Professional traders gather the information in the charts. If their setup is there, they trade. If not, they do something else. Since they have reticular cognition, reticular means they see it and cognition means they understand it, they see all of the parts of the Forex. By the way, the Forex is not complicated, it's just complex. And that is what the learning curve is all about. And retail traders are loath to put the time to get it. But it takes just 100 hours to be world class in one thing. This is an article, there's lots of them on the web, you can go look them up. All right, it proposes a 100-hour rule. It proposes that by focusing on rare and valuable micro skills, one can become proficient in just 100 hours. This idea is supported by research on deliberate practice and the success stories of individuals. Deliberate practice, as defined by psychologist Anders Ericsson, involves breaking down skills into sub-skills and dedicated focused practice to each of them. That's what learning price action is all about, and then finding your one setup. As I've already stated, I'm a bear flag trader. That means I rarely take long positions. I concentrate on currency pairs that are going short. I concentrate on pairs that are over and over, put bear flags in the charts, typically the yen crosses. I can now trade all kinds of setups after 24 years of trading, but my go-to is still trading bear flags. Why? Because I'm world class in them. Professional traders, once they have identified their opportunity, not a opportunity, their specific opportunity, determine the target, analyze the risk. If there's less than 55 pips, they pass. They identify the barriers to the targets. Those are places where they will move their stops, but hold for the target. Find the area where they can at least double their position en route to the target. If they can't find one, they pass. put their trade on, and then they can walk away. If the market is always right, and you are now statistically right more than not, you walk away. It's either going to work or you take a small loss on the trade. All of that is figured out before you ever put on a trade. And as long as your win ratio is 65% or better, and your average pip capture is 35 plus pips, you're sustainable. Your losses will not overcome your wins. So welcome to professional trading. No need to watch the currency since you've factored in the variables and always covered your risk. Since you are now a master, world class in this one setup, there is nothing to do. You can't change what the market is going to do. You have no control over the market, only your own actions. Plan correctly, risk covered, new positions planned, and a destination determined by the charts, not you. It's either going to work or it won't. So enjoy the journey because you're never going to get to the destination. You will always be learning. Just do it. Hope that helps you.